Good evening, everybody, and welcome to another edition of Live Market Analysis, back after a couple of weeks hiatus. It's a pleasure to be with you as we delve into the big market moves since our last updates. With plenty going on, as we'll see after we do the disclaimer, which says that everything we're going to discuss tonight is general in nature, has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the information in that disclaimer is important. Most importantly, of course, that trading is risky. You could lose money. You probably lose money at some stage. It's important that you understand it's you and not I who's responsible for the stuff that you choose to do. Tonight's agenda is the same as every other week, but we always have new people coming on board. So for them, you ask questions about the stocks you're interested in, or it could be a crypto, it could be an index, it could be a commodity, and I'll do my best to give you some technical analysis on it or a bit of background. Otherwise, could be anything about trading as well, the three M's we often say of methodology, money management and mindset. It is preferable, if you could, please, tell me what sort of setup you're after. So whether it be a continuation setup, a turnaround setup, or an aggressive setup, please. Okay, going to kick off our portfolio management model as we always do with the Nasdaq composite, and we can see here that we have the makings, the very solid makings of a reversal of the present bear market. It's a bear market because we fell more than 20% from that 20205 high to that 14784 low. So technically, until we rally 20% from the low, some people will say that starts the next bull market, or some people will say well, it's not until you take out the old high, and hey, the jury's out, whatever makes you feel better as to which one of those scenarios. But we can see a very credible reversal thus far in terms of the structure, so the price action, the peaks and the troughs. We can see rising troughs here. 15685 is higher than 14784. We can see quite V-shaped rallies on each of those troughs. And that is important as well, as V-shaped rallies are always the strongest. They indicate the strongest demand and the least resistance, the least pushback, the least supply to that demand. And the candles certainly Friday, because we had a day off, Friday and Thursday's candle looking very, very strong there. Even this one here, even though it was a black candle, still gapping up. So technically that's still a white one. And then you've got a white one there as well. And even these, if you read my analysis on market index in the evening wrap, we call these three fighting retreats as well. So for the most part, the demand side has been in charge for the last sort of 6 or 7 candles, and then adding in all of these as well. It's a pretty decent rally. It's taken us back above the short-term trend ribbon. That's neutralised. That's important as well. And really just the long-term trend ribbon standing between us and confirmation that this down phase is over and we're potentially in a new up phase. So we're not far away at all, but we're also potentially not far away. And I know this shouldn't matter. It shouldn't matter to us because we're technical analysts. We only look at stuff on screen. So I'm going to say it very quickly and then move on. You're hearing all sorts of reports coming out and news wires about ships that are not travelling between China and the US or are empty. Travelling between China and the US, and that some, supermarket and grocery shelves are starting to dwindle in terms of their product, question mark. So we know what happened the last time that particular set of circumstance occurred. That was globally, of course, back in the pandemic. This one might well be more localised to the US, not to China. They'll be fine. They'll produce everything they need in China. But potentially, prices went up. We saw an inflationary pulse because there was a shortage of goods compared to the demand for those goods. And how will the Fed respond to that inflation? How will markets respond to that inflation? It hasn't happened yet. So again, I regret saying it already, but I'm just trying to get across some of the thoughts. I'm not doubts, but some of the thoughts I'm grappling with as an ardent technical analyst this time around. I think in every other market correction, and some of you may have been listening to me long enough to have heard me navigate you through a couple of them. There are a set of macroeconomic circumstances that weren't caused by an individual, but were caused by a sequence of things happening, and it's often very difficult to undo each of those things to then get things right again. This sequence, this sequence was caused by an individual making, almost autonomous decisions. And look, I'm not trying to be political here. Maybe I've overstated that to some extent. But in the same way as he can make those decisions, he can then reverse those decisions as well. And then markets will have to readjust. So it's a little bit different, I guess. We're all flying by the seat of our pants. Okay, the portfolio management model. That's the analysis. The analysis is that's a very credible reversal. Any other time, and I should say this time also, I should forget those things I said. This time also, and any other time, there's a credible reversal, and it would not surprise me. I'm going to say it's almost 50-50. It's like 40, 60, 45, 55, what do you want to call it? In terms of that's the bottom. We've seen the bottom, and there's a very strong chance that we're going to go back up now and make new highs. Okay, normally. Let's watch out for signals around that long-term uptrend ribbon, big black candles in there, and that could well be the start of the narrative that those bad things are starting to play out. And maybe we just have to fulfill the prophecy of my trend ribbons to get there and do that. Long upper shadows into there will tell you that supply is coming in and overwhelming this mysterious demand. Is it just demand because there's still lots of cash around? Cash needs to find a home. Money's come out of bonds. I don't know. Just this total unerring belief in US stocks. I don't know, but that's what we'll watch for. We don't want to see, in the absence of that, we don't want to see it close back below 15,685. And outside of those things, continuous demand side candles, it's hunky-dory. And could you imagine us saying something like, oh, here we are, back at new highs, and that whole schmozzle of a thing is a distant memory. That's the S&P 500, that's the benchmark. Let's have a look at the Aussie 200 here. A similar sort of rally. If there is a difference, it's that we don't really have our second higher trough. This is kind of one though. That little downward pointing shadow, I know that's an outside dot, so technically there was no lower high and lower low to cause the peak to then subsequently cause the trough, but I'm interpreting it as such, and it is a very credible low as well. In fact, we had our interaction with our long-term uptrend ribbon today, and we can see by pure coincidence, I'm not saying my ribbon did that, it's a pure coincidence that we actually saw the upper shadow popped in at the long-term uptrend ribbon, which is what I was suggesting we need to look out for on the Nasdaq. In all of this confusion and excitement, I forgot to tell you where I think we should be in terms of risk. And we have previously been at maximum conservatism, minimum risk setting, 1/3. We've said, if you can find the right charts, you can go up to as much of that exposure. Obviously fully invested in that 1/3, but then covering it with shorts. Maybe you stick with the 1/3 and you just take the shorts off the table to make that 1/3 count some more. I can see reason to go to 50-50 here if you want to. And I wonder how many people would emphatically do that and say, hey, Carly, I'm not worried about any of that other stuff. I'm just going to trust the charts and go to 50-50 here. Ditto on the ASX 200. My official call is there's enough there to start. You're not going to go from 33% to 50% tomorrow, but if you find the charts, and that's going to be the hard part, because as I'll get to in a little bit, I'll talk about my scans for today. In fact, the scans for the last couple of days, if you've been reading my Chart Watch articles in the morning, you should all read that, because I'm starting to do a little bit of commentary in there now. Though I'm saying that it's a very curious rally. We've gone up 860 points or something like that, and I've got almost record low numbers of long setups. So it's one thing to say, well, this portfolio management model is allowing us to increase our risk. There's nothing to say, well, I can actually find charts to increase my risk with. So there's a nice little natural balancing act that's going on between the individual charts themselves and the portfolio management model. But I am on record, as much as I'm probably going to regret this in a couple of weeks, as saying, if you can find the risk, then moving back towards the 50%, but be as conservative as you think you need to be. A tricky little market. Let's see now. Let's do the whip around the grounds and see if there's anything to push us off that idea. I'd love to know your comments, so if you want to write some comments in there, in the section there, and I'm happy to get your thoughts on it. I'll do the best I can to get to them. In the meantime, we're going to head over to the Russell 2000, And, look, I probably should get rid of some. I haven't updated this for a while, so you can see a lot of these potential demand points from the past, and they go all the way back here, were taken out until we got this big engulfing white candle. I don't know if you remember what caused that. That was Trump's backflip. People don't like to, but somebody pulled me up on calling it a backflip. They said, Carl, a backflip is, I don't know, you're going backwards. This is more of an about face. So I've stopped calling it a backflip since then. I'm calling it an about face now. His about face on his quote unquote reciprocal tariffs. And I have a little chuckle every time I write that term, reciprocal tariffs, because I must put it in quotes, because that's what all of us in the media are doing, because none of us actually know how those tariffs are reciprocating other tariffs that were in place. So that's why we do that, reciprocal tariffs, because there were no, I mean, he may well have had a very good reason to say that they are equating other trade restrictions and impediments in place, but there were no actual tariffs there to reciprocate, if you get what I mean. So that was that walk back day, and this is the nature of this market where, yes, he can make it bad, and yes, he can make it not so bad by just backflipping or about facing. But that is not as credible. That is clearly not as credible a rally, but still a decent one. Okay, so what we're seeing here is the heart of corporate America, the stocks that may not be as able to diversify their production bases or withstand any downturn in the US economy, suffering more than the bigger stocks that the perception is that perhaps they can, or even there's a perception among the fund managers that they're more liquid anyway. So look, I've got to take some risk. The market's going back. I have to be invested. And this is the thing. Nothing makes the market go up more than the market going up, because fund managers can't afford to underperform. That's how they get the bonuses. So if they're going to take risks, they'll do it in the big caps. They'll do it in the S&P 500 stocks and those big Nasdaq stocks with big weighting, because they're liquid enough for these bigger funds to get out quickly if they need to. And that's when you see that big upper shadow and on huge volume to tell us that we're turning around again. So the Russell 2000 certainly doesn't make me want to go more towards that 50%. But it's not exactly a red flag not to either. And let's head around the world, because in many ways, perhaps this is becoming more and more a US-centric problem. So outside of the US, we looked at obviously our market and some of these European markets. Maybe they won't be as badly hit. The CAC there is a very credible V-shaped bounce. The DAX is almost back to where it started, and we have seen massive capital flows into Europe. I'll talk about that in a second. The Euro Stoxx 50, somewhere in between the CAC and the DAX. The FTSE actually a pretty credible bounce there as well, very much V-shaped. And now, hola, in Spain, we are. That's got to be the best performing major market index in the world, surely. The Spanish, what's going on in Spain, ladies and gentlemen? I ask you. Asia has been harder hit though. Hang Seng, probably less than a 50% rally. Nikkei, probably about the same as that. Nifty 50 starting to look pretty good again there. India, Shanghai Composite, somewhere in between, as is the A50 shares there. Let's just try and catch some of your comments. A few questions there. I'm just trying to get to the... I'm on the right screen. Going thumbs down. What's wrong, Matthew? Can't get you. Missed some good stuff because only half a screen. Maybe it's something at your end, and if somebody can confirm I'm only half a screen. I think I'm a whole screen. How about that? I think I'm a whole screen. But somebody will let us know. To see no, Hayden's helping him out. There you go. Screen all good here. No, somebody's helping out with the rest of the screen there. So thank you for that. Can't see any thoughts and questions on or thoughts around what's going on. So I'm guessing that means you're all as clueless as I am right now. So let us proceed with our analysis. We'll do a quick whip around now the ASX sectors. Consumer discretionary sector. Okay, so here's a bit of a sound out. Harvey Norman appeared on my feature chart list today. So did Nick Scali, and there was one other. It escapes me. AP Eagers, discretionary sector, starting to look better than a few others we'll probably see. It's back above its long-term uptrend driven. Energy, interesting rally. Interesting. not good enough yet. Financials has done very, very well. Disappointing today, though. Gold, you know what I told you after this. I tweeted it, and I said it was, in my opinion, a species-ending event. I think the gold story is all but over, at least for a while. I mean, we've seen pullbacks like this before, and we've seen the market take a good 3 to 4 months to recover. I think this is far more severe than what we saw through here. Maybe I can find another example in this uptrend. Probably not. Probably not. Probably have to go back a while. But I think we're in a little bit of trouble here. So just be a little bit careful. Doesn't mean wholesale get out if trends are still good, but just be aware it might be harder to get back to some of those highs. The problem is that when you've got such a crowded trade, and everybody's so long, you inevitably drag in a bunch of Johnny-come-latelys at the end of it, or Susie-come-latelys, so I want to be politically correct here, and they are put into substantial losses very, very quickly. And all they want to do is get the hell out now. And preferably, I mean, they don't want to get out here, because how can they possibly deal with this concept of getting in at the top and then losing money straight away? They'd love to break even. So any pushback, any rally back into that latent supply will struggle. And then you've also got other people like me who now will be really reluctant to buy this trend, because I know what I know and they know what they know. So you do have a diminishment in demand, and you have plenty of latent supply. And then all you need is that combination to cause a lower peak, and then some of the other technical traders start to pick up on it, and then you break through that trough, and then you're in a whole different ball game. So I think just be a little bit careful on that one. And sometimes it's not such a bad thing to get a big turnaround like that, because it allows you to act very quickly rather than the death of 1,000 cuts, so to speak. Healthcare, we've seen a lot of credible rallies today. I don't think that's it just yet. Technology, I'm going to put that in the same camp. So I think discretionary, for example, is looking better than many of these. What about resources? Looking at materials sector, a great V-shape, not bad at all, but probably needs to do a little bit more work. Property, in that same boat. Staples looking better than others because of its defensive nature, and that's the Telstra index there as well. So that is a very defensive sector, as is utilities, to be fair. So we can see a lot of these moves making a lot of sense. Let us head over to the base metals, simply because they are here, but it does segue us into our discussion of commodities, and we're looking at aluminium. And really, if the global economy is going to be okay, then we should see some decent rallies here, some credible rallies here. Aluminium, does it fall into that category? Probably not just yet. Copper, I think, is looking substantially better. Iron ore we'll look at in a second. Actually, that's a decent rally on nickel, isn't it? Almost all the way back. Lead, probably not so much. Tin, clearly not so much, but I think there must be a fundamental driver in that big decline. And zinc, not. So not getting a great deal of confidence coming from those. I know this one looks a bit weird, but that's only because we're in line chart. If we go to the candle chart, it looks even worse, and that, of course, is lithium carbonate. Absolutely toasted, that one. Sliced, diced, roasted and toasted. That's your spodumene concentrate, which is coming back down also. Let's head over and finish off our tour around the world with completion of these commodities here. Silver, and that is the species in event. We're seeing, hey, that's a decent rally, but we're seeing how it will slow into those highs where so many people got caught out. Gold, I must admit, this doesn't look as bad, does it? This is not great. This is still a credible supply-side candle with a confirming supply-side candle there. Trying to rally. Look at how feeble this bounce is on this day. You're always going to get a bounce. You must, in such a strong trend with such a strong narrative supporting it, and you've got to understand just how many so-called experts right now are touting gold as just the beginning of the run, that you must get a bounce. And what's brilliant about what we do here is we can assess that bounce and understand if there's actually any real money behind that narrative, behind those words, behind those talking heads and those typed words. And for me, so far, it doesn't look like that's the case. And I'm not smarter than them. I'm only as smart as the candles that I see. And I think supply is having a greater say in what's happening here than it was before. So just be a little bit careful. That's all I'm saying on gold. Let's head over to copper. Let's actually some decent candles there, some really decent candles moving back above the long-term uptrend ribbon. We can't say that for so many things. Back above the short term, and now showing signs that holding that short term trend ribbon there. So that's decent. I'm far from going long on many things right now, but if you're, I don't know, somehow exposed to that, that's not too bad. Iron ore hasn't fallen off the cliff, as many predicted, I guess, with the China fallout. So that's perhaps encouraging. And uranium, how about that? Finally, a rally might make some people happy, might be ho-hum for others, but I do believe we are in a short-term uptrend for uranium. Certainly the short-term downtrend is over, but of course we're still in a broader uranium bear market, but bear markets have to turn, they have to change somehow, and that's how potentially this one is changing. Having a look at some of the energy contracts now, ho-hum, and I wonder if some of these charts here are more indicative of what stocks should be doing than what stocks are doing, and those ones are in the doldrums anyway. Let us head over to the indices and bonds, the price of money. In fact, before I go back to in Forex, it's worth checking a few things. Here's the dollar index. So we know that money has been flying out of US assets like bonds, like stocks, obviously, and that's reflected here in this sharp fall in the US dollar index and flying into things like gold, of course. So we've seen a little bit of a steadying here, but nothing of a steadying here of the magnitude of what we've seen in stocks. For some reason, the rally in stocks is magnified. If somebody wants to ask about Bitcoin, they can, but I'm not specifically going to go to it. I know you can see the ticker down the bottom there. And the Aussie dollar has recovered substantially because we are actually the beneficiary. The first knee-jerk reaction was, oh my gosh, this trade war is going to be the end of the world. It's going to destroy the global economy because Australia is directly exposed to that. And then the realization was that President Trump, by doing this, is probably going to break the American financial system, perhaps. Certainly this idea that these treasuries here are the reserve currency of the world, and that was that big day of the announcement, Liberation Day announcement. Then you can see that massive move. I wrote in my evening wrap that shit's getting real, I think was the paraphrasing there, and we're going to see some pretty interesting things happening over the next 24 to 48 hours, and that was the crash that ensued. And of course, getting up to nearly 460, so 160 basis points in just a few sessions is pretty serious. And looking at the 30s, which is your mortgage rates as well, going over 170 basis points there from top to bottom. So we have seen a bit of a moderation since then. That's obviously bond markets walking back from the ledge, allowing stock markets to rally a little. But the big point I wanted to make here is if we look at our Aussie 10s, they're coming down. So don't forget that falling bond yields are rising bond prices. And rising bond prices can only occur if global investors are buying your bonds. And why are they buying your bonds? Look at the US dollar index, look at the US treasury yields. They just think that Australia's going to be able to pay their bills. It's a relatively safe country, safe jurisdiction, which with quote unquote a very stable political system, where let's face it, we can't have those crazy swings of policy here because you've got a 3-year term and you've got you've got a very combative two-party system effectively, and nobody wants to rock the boat that much, do they? So relatively politically stable, a very liquid currency, one of the top 5, 6, depending on the day, currencies in the world in terms of liquidity. So if you get your money in here into these assets, which are yielding for the most part the same as US treasuries, you're going to be able to get it out should you need to. So that's very much changed. I think that probably surprised a lot of traders this time around. This time around, I mean, compared to even COVID, compared to the GFC, where the Aussie was spanked because of its association with risk on. And that's kind of not the case today because it's they're always different. They're always a little bit different. And then we're seeing the European yields coming down substantially as well, reflecting that global flow of capital away from the United States. And we'll probably see Japanese yields coming down as well rapidly when all of that stuff hit the fan, when obviously, Japanese, a very stable political system, comparatively speaking. So that's, I think that's the whip around the grounds. Hopefully you understand what the hell's going on right now. But it's one thing to understand what the hell's going on right now, then be in a position to predict what's going to happen next, isn't it? And that's kind of the hard part. So that's very much top down. And what we're going to do is head over to your requests and look at bottom up, which means, look chart by chart. And that's largely all we can really do. And it's probably the right way to go, to be fair. It's just going chart by chart and just keeping a very modest portfolio risk, not being a hero, because there are, in my opinion, too many unknowns just at this stage. Okay, I'm just trying to get everything organised over here. So I'll just do, there's only one offline request, and Mick had some questions from last week, and then he's had some from this week. So I'll get through them very quickly, I promise. Let's go back here, and we're going to kick off with Cat. Mick, you asked about last week, and I felt I'd just cover it again this week. Last week we were full risk position. I think I even ran it maybe on this day here in the watch list. I'm not sure if I made it a feature chart. I can't remember. Maybe this day here. I don't know. So we all were on the same page. It was plus 1/3 sort of stuff. There's nothing since then that tells me that we shouldn't still be in that position. I don't think we need to add any new risk based upon today's candle. It's not a bad candle at all, just a little bit of upper shadow and just a little bit of trepidation around that arrow there, which is the former point of supply. So any sort of dink from here I think is fine. And it's probably too big a dink, but any downward pointing shadow followed by a nice high close would be then putting us into a plus 1/3 if you can find it. But otherwise, if you're already on it, I'm happy to hold what we've got as a FRP also. And you'll see this change colour because nobody can see that light green stuff. Moving on to Mick's next one, which is TBR, also asking for a potential 1/3. Look, I can't see why not. Short-term uptrend, we've got light green, dark green, long-term uptrend. Price action is pretty good, but we can see fairly sketchy history of price action. We've got candles that are full blocks, candles that are just blips, on days where we can see very, very little volume of price action. 1,693 shares on that day. On that day, 3 shares. So for me, look, it's not that I won't trade these shares, but if I see a similar setup than this, similar price action, similar trends, similar candles, if you can get it, I will take the other chart with better liquidity, just because it's going to be easier to get into, get out, and less likely that a small amount of shares could completely wipe out your trade. So let's put that to the side, and I'm not putting it to the side to say it's irrelevant, putting it to the side to say, okay, now you know it, you make your own decision. I don't mind it. Look, next high close, happy to add a third. Don't need to do anything on this candle, but it's not far away. And we can see that it has tested this old point of supply. Now, I really, what's the right word? I appreciate. That's the wrong word. I think it's always a good thing. I'm getting worse now. It's always a good thing when you have a test of a big point of supply. You have a very shallow pullback, throw in a nice candle, and then on the next run, you've weakened at this point of supply. It's like if you've got a truck driving towards a brick wall for whatever reason, that you hit the wall, you weaken the wall, you reverse back, and then you get through it on the next go. And that's what we're doing here. So next high close, plus 1/3 FRP. I can't understand why it's going back to light green. FRP, there you go. It'll be nice to me in a second. There we go. And we're going now to CEL, which I think what Mick was asking about getting out of. So we'll talk about that. No, I guess I've copied it. Time to get in, or has it run too hard? Should I wait for a pullback? No. No, I don't think anything's ever run too hard necessarily. I mean, these are great white candles. Should you wait for a pullback? If it's pulling back, then wait for a pullback. If it's not pulling back, keep going, I guess. Let's just zoom normal because I want to see what else is going on here. And without that, it probably looks better than it is. We definitely have a valid, incredible point of supply up here. So let's just pop that in. So in many ways, probably the rally up to this point is logical, and the pullback from there is roughly logical, not far away from where investors who got in this time are probably wanting to start to supply a little bit into the market. Very shallow pullback, I think, all things considered. I mean, we haven't moved out of the range of this dominant candle. I think we can use the candle itself almost as a point of demand because we saw the gap. There was a huge change in market thinking in terms of what the value of this stock is to create that gap and then to keep going. I don't know why it pulled back. It can happen. So I think, look, as long as the pullback remains shallow, as long as we continue to trade above that point of demand, I'm happy to consider the next high close. And I think that's all we're really waiting for here, to add some risk to it. The question then will, I've only just thought of this, but the question then will become, FRP, if you've got it, the question will become, can we make the reward to risk work into that point of supply? So let's say that the candle looked like this. I know it's going to look weird, but it'll make more sense in a second. So let's say the candle looked like this, right? This was the next high close candle that you witnessed, and therefore, okay, Carl said, okay, I can add a third risk. Well, the problem now is if you're getting in around here, right, and your de-risking point is somewhere beneath this pseudo point of demand, do we have at least one-to-one into that point of supply there? So, look, I've drawn a hypothetical candle. You won't know what candle it is until you see it, but you may struggle a little bit. And if it's 0.8 to 1 or whatever it is, that's less relevant than is there a better setup out there that's offering 2 to 1 or 3 to 1? It's a turnaround setup. It's got great candles. It's got great price action just like this. It's got a nice volume signal just like this, but it's offering 2 to 1 or 3 to 1 or even 1.3 to 1. Whereas this is offering 0.8 to 1 or 0.9 to 1. So how badly do you want to do this for the sake of doing this compared to the alternatives that are out there at the time? Because it's we can't just look at a setup in isolation. So yeah, there's a setup there, and it's a good or bad setup. It's how does it compare to the other ones that we've got? So they're last week's ones for Mick. Mick's got this week's one, which is P&V for an aggressive setup. I don't think it's an aggressive setup yet. But obviously, we've got 2 downtrends, so that would rule it out. For starters, an aggressive setup should at least have a short-term uptrend or a green short-term uptrend ribbon at the very, very least, an amber short-term uptrend ribbon with some price action, it dinks above it. We're not even close yet. So all this is still a short-term and long-term downtrend, and therefore we're still potentially considering short selling opportunities, and we are not considering long trading opportunities at this stage. AGG. That's not that one. He's got AGG. I wrote down AGG for aggressive. Sorry, Mick. DVP is definitely the next one. And what happened here? So I'm not sure. I can't remember. There might have been some news, or it might have just been something to do with the fact that the market had a bit of a downturn. April 2 was Trump's announcement there, so that was our response to it, and that response to it. So maybe just a victim of circumstance. We have done some analysis over the last couple of weeks where we said that was probably the point of no return, or that was the point of no return, and that was your zero risk. And the good news is, if you had followed that methodology, it's only really just getting back to your exit point now. So you missed out on all of this downside volatility. And my brain doesn't go, oh, I should have bought it here. That's just not the way I operate. My brain goes, oh, wow, the system has worked really well there because it cut out all this downside volatility. And if I wanted to buy it now because it's giving me a signal, how good is that? I didn't have to suffer through all that and all the doubt and all the concern. Would I buy it here? This is not the worst chart. This is a strong chart, but I don't think I'm in the mood for it, honestly. And the reason why I say it's strong is, look, today's candle is a nice lower shadow, dipping into that short-term trend ribbon, which is beginning again to act as dynamic demand. We can see it doing its job. The long-term trend ribbon is also doing its job as well. So there's definitely some demand in the system. It's come back in a strong way, and supply is struggling to deal with that. I think it's a really strong, what can we call it? Continuation turnaround, because it's still a long-term uptrend. But I question the desire and the need to do something like this ahead of probably some better setups that we're going to see tonight. If you are not that way inclined, like I am right now, showing some trepidation, then NHC, today's candle's not far from it, to be honest, plus 1/3 FRP if you've got it though. Okay, so yeah, I don't mind it, Mick, but I question the need to do it. And FCL is his final one. The candles look better here. Look at these white candles. I mean, this thing really didn't care that the whole world was going to hell in a handbasket a couple of weeks ago. So that's very impressive in itself. But it looks a bit slow and steady, doesn't it? So the leopard probably won't change its spots all that much. Will we get an explosive move up to 220 and 230 and beyond? That is a major point of supply tested here, at least. I'm not so sure. Again, we're looking at trade by trade, setup by setup, and as far as it goes, I can't fault it. I'm not saying it's the strongest one we're going to find tonight, but if you were that way inclined, I wouldn't stop you. Okay, but I would question how explosive this one potentially could be. That's it, Mick. Let's head over to the online requests. Thank you for everybody for being so patient. We've got the U100. What's the U100 there, Francine? Is that an ETF? Let me see if I can find it. U100. I'm not familiar with it. It's not there. Oh, it is there. There we go. Okay. It wasn't that hard to find it. The Global X US 100. So this must be similar to the S&P 100 index. Don't worry about the candles here. The candles are irrelevant. This is how the ETF is trading. You can see it tends to open high and then come down on the day. I wonder if that's not market makers making a little bit of money while they're making their market. You'd be pretty annoyed, wouldn't you, if you sort of bought in every morning on this? You just wait to the end of the day to buy it, I guess. So let's not look at that because it's irrelevant. What we're really looking at here, what you must do when you're doing this sort of analysis, is heading over here and going, S&P 100. Maybe if you've got indices, we might have more success. But it's not there, is it? So maybe I don't think I have it. I might have it here. I'm not so sure. Let's go to SP. I think S&P 100. Was it SP? I've got to find the code. That's what it is. No, it's $sign SPX. There we go. Okay, so it'll be in this area. SPX, $sign SPX1. No, I don't think I have the chart for you. But we're kind of getting further away from relevance here, aren't we? Because the 100 is going to act pretty much as the 500 is going. So when you say, Francine, U100, you really need to be saying, Carl, how do you feel about going long the US market right now? And I think I've explained that at the start. We have some credible signals that the low is in, like a proper low, like the start of the next bull market has begun. If we consider what's on screen compared to dozens of other bear markets and corrections, it's credible. There's every chance that it continues, and therefore buying the U100 here is the right thing to do. But I've also discussed some of the other concerns I have about going long here, and I couldn't be any clearer. I could not have been any clearer with you tonight. We're at 1/3 risk. If you feel comfortable in doing so, you can start moving towards 50% portfolio risk. So take that and then apply that to the idea of whether you want to be long this thing here by trading the U100, because all the U100 is, actually I'm going to stay there, aren't I? All the U100 is simply that chart from before. That's what you're really asking. Okay, BKNS, which is the banking sector ETF. I think it's BNKS, isn't it? Yep, BNKS there, Francine. Ditto in terms of, this chart in itself, because it's an ETF, is less relevant. Really what we're talking about here, and it's global banks, isn't it? So without knowing what's in it, hard to go and get charts on them. But there's a credible bounce there. It's V-shaped. We're back above the long-term uptrend ribbon. I've given you my views on macros sort of stuff. Let's go to Adonis. Adonis, thoughts on the following ASX stocks. Alkane, I think, still looks pretty good. I put that in the general list tonight, Adonis, so plus 1/3. If it's in that list, it's very simple. Plus 1/3. FRP, no questions. So you don't have to wait for the next high close, for example. That candle is sufficient for me to add risk to it. Otherwise, we have a great short-term trend. We have a very nice developing long-term trend. The price action, this last little trough that's forming here, is nicely above the second from last peak. If you're not sure what I'm talking about, I should have to show you some other stuff too, don't I? So this and this and this. All right, so if we go to here, I should have set this up in advance. Yeah, no, I won't do it because the code might be flashed up on the screen, and this is getting recorded. So, but I have the peaks and troughs indicator. I'm going to say 95% finished. Okay, it works really well. It's doing everything I want it to do, apart from one little thing. And when that's done, I'll be able to let you loose on it. So it'll draw these peaks and troughs in for you exactly the way I want them to, not the next person that talking head on the internet. And it'll actually label them for you as well, so you can see what the price is exactly. So the point we're making here is that this trough here is at or above the second from last peak. And that means we've got good price action and a nice candle there. So everything we need to see. Adonis happy with that one, plus 1/3. Let's go to ARU, which is also on the list again, Adonis. So you're going 2 from 2 there. I can't remember if I ran this as a feature. It's not hard to check. I didn't run it as a feature. They were the features there. Okay. And tonight I've already talked about, well, quality of setups. AP Eagers, Aspen Group, Austell. ASM is a cheeky, sneaky one. Okay, it's definitely a turnaround setup. I don't think we have the same sorts of impediments as some of the other ones. That's a bit further away, so not hard to make reward to risk on this one. Okay, you can see that straight up. But it is a bit of a cheeky one. But I think having some risk on that is warranted. And also as a turnaround setup, just diversifying your setups a bit. Barton Gold, I think, is exemplary. There's that defence ETF there. And, Francine, you asked about a couple of ETFs, and I think that's got a better trend than both of those. WA8. Also, on the feature uptrends list, it might steal a little bit of your thunder tonight, but don't let it. Keep your requests coming. But ARU certainly made the broader shortlist, but didn't make the feature list. And, comparing and contrasting, I think there's value in doing that exercise and saying, well, Carl, why didn't it make it in the other ones? Well, we've seen how good the other ones were. That's not what I wanted. Let's go normal. And just, the price action, we took price action, this little dip here is probably a little bit below. I don't think that's a peak there. I think it's probably this peak's what the one I'm looking at, so it's a little bit below. The pullback's a little bit sharper, a little bit more credible, and I'm really splitting hairs here to compare and contrast. Otherwise, it's still very strong. It's on the list. It's plus 1/3. And now I'm looking at it. Maybe I was being too pedantic, and now I'm regretting not putting in as more of a feature. The volume's good. The volume's good as well. I think really just here the price section. I think I really wanted to see this trough a little bit higher up there compared to that one, and that's all it is. And sometimes I am very pedantic with what makes the feature and what is in simply the shortlist. But don't forget, all the shortlist ones are plus 1/3. They're not waiting for next high closes. They are plus 1/3. Let's go to BG. Well, there you go. Adonis is all over it. So BGD was his next request, and APE also, which are top tier setups. And I know that sometimes they look scary because they've gone up the most, but they've got the cleanest candles, they've got the cleanest price action as well. And I know it'll be hard to buy it here, but don't forget, I've run APE probably 20 times in the last 3 or 4 weeks. I've run Barton Gold at least 6 or 7 times in the last few weeks. So if you're kind of following the model, even if you are late to this one, the next one that's just starting out, you'll be on that early. Sometimes you're going to be a little late to things. Not to say that any of these things are looking late at all, but it is a psychological. Sometimes you'll look at the ones that have gone up the least and try and buy those instead of just buying the ones that are going up the most. The ones that are going up the most are going up the most for a reason. We'll look at US ones in a little while. Adonis. Ben's got, hey Carl, I'm interested in starting to invest in S&P 500. Which platform would you recommend? Okay, so I don't know I'm not sure if I understand what you mean by S&P 500, but maybe you're looking to invest in US stocks generally. Okay, so they don't have to be in the S&P 500, because I don't think you would restrict yourself necessarily to just the S&P 500 stocks. So let's maybe correct that by saying you're interested in investing in the US, in US stocks. I think that's wonderful. Which platform would I recommend? Look, everyone, I'm not Google. I'm not review boards. Go and ask Google and review boards about which broker to use. But I'll reiterate what I said last week, which is any of those are fine. CMC, even ComSec. I think ComSec are more on the expensive side than they probably need to be. IG Markets, any of the big, credible ones that are licensed here, they're licensed in other jurisdictions. They're not going to have the lowest rate, but they're going to be safe. Their money's going to be there tomorrow and the next day, and you can speak to a real person about finding your money if you need to. Okay, so there's a little bit of, you're going to pay a little bit for that peace of mind. If you don't mind so much, you're not running huge balances, then maybe you can go for more of a discount style broker, or if you're going to, and then sometimes I was going to say, if you're going to be sort of, keeping a minimum amount there and transferring money out regularly to mitigate some of that risk, then you can go for more of a discount rate. But sometimes it's hard to transfer money in and out. Sometimes they charge you extras for doing that because everything ends up being, a currency conversion. Yeah, look, I mean, we could lose a lot of time here talking about these things when, and I don't want to sound nasty, but is it fair to say you can get that information off Google, you can get it off finder.com, you can get it off, I don't know, Compare the Market or whatever for brokers. What you can't get off Google is me talking about stocks and me talking about strategy, okay? And you've only got me here for an hour and a bit every week. So what would you rather me talk about? What's the best broker and what's the best platform, or how to trade stocks on that platform? So I think let's go with the second one. Let's do your requests here. Let's go to CHN. CHN, which, look, it's bouncing. That's important. There's some demand in the system. There's, I would say, almost a credible credible volume response here. Is it enough? No, I'm not so sure. Look, it was something I even got excited about. I've tried to give this one every chance. Here, I think we had a plus 1/3. I think even here we had a plus 1/3, and both times unmitigated disasters. So no, I'm not going to call it plus 1/3 here. Maybe the low, I don't know, but it just doesn't warrant it anyway. I've still got a short-term downtrend. I've still got a long-term downtrend. Yes, the price action is heading in the right direction. That's good news as well. So if you're a long-time sufferer, look, I can't understand why you would be, because we're not wed to our stocks, but at least there is some signs of building demand. How do I know demand is building? I can see higher troughs coming in and removal of supply in the system. How do I know that? Well, I'm taking out peaks. Peaks represent supply. So if I'm closing above peaks, I'm taking out the supply that's at those peaks. But it's minor in terms of we're taking out supply down here when the real big supply is up here, and that's what we need to deal with. So until we deal with that, it's very unlikely that I'm going to be calling it something to add risk on. Okay, it could over time make itself more of an aggressive setup, and stylizing here, after you have your sort of big downturn, you would have to really build a quite nice basing pattern and then start to just sort of creep up a little bit, and maybe even have a sharp little rally there with the moving averages starting to just turn up. And, we're talking about when the long-term trend ribbon might be sort of up here still, okay? And therefore, we've got room between our current entry point and the long-term uptrend ribbon, right, to make, a decent trade out of it. So we're saying that, well, that's our uptrend, that's our upside, and our downside sort of this much. So we're actually getting a really nice sort of reward to risk trade out of it. So stylizing, very stylized, that's what the aggressive setup looks like. I know people get really confused about what it is. It doesn't happen all that often. Normally they become turnaround setups because the interaction with this long-term trend ribbon happens at a point where there isn't that reward to risk. Before that, we want to see lots of volume happening towards the bottom, lots of volatility as well. We want to see at least a short-term uptrend ribbon, okay, or green ribbon there. We've talked about price action. So that's an aggressive setup. That's what we need to see. We're not there yet. So for me, it's a pass. Okay. Looking at PDN, I did tweet, didn't I? I did the fateful tweet, and uranium bulls should they owe me one here. It was on that bar there. I tweeted, how could it be so easy being short this one? And of course, then Sprott, literally the day after that, Sprott Inc. announced that they were hoovering up a bunch of our uranium stocks, didn't they? Taking extra 1.5-2% chunks in many cases. And of course, the shorts got out of town, and a bit of speculative money came in. Decent, credible volume response there. So there is a bit of a demand side response, not just short covering. And the candles tell me that as well. So is that the low? Look, I don't know. It's too early for me to tell. But I wouldn't want to be short right now with that rally. I think getting back to neutral is the right place for me to be. So that's a win. That's a win for the uranium bulls, is that, I wouldn't be actively shorting that now because of what's happened. And if you were short and you got tagged by it, unfortunately, and this won't make you feel better, but unfortunately shit happens, and you can't know when news events like that are going to turn the price action around. It will happen to you, or it could be another type of announcement or earnings or whatever it is, but you just have to cop it and unfortunately move on. Would I buy it? No, absolutely not. For all the reasons I talked about before, I've got still a short-term downtrend. It is. I know it's neutral, but we're not seeing the dink above that short-term trend yet. The long-term trend is clearly down, and whilst the price action has improved, it's not enough yet for me to call the turn of the trend. And for some people who really dislike this about my system, Carl, clearly $4 was the place to buy. That's where it was cheap. That's where you should have bought in. Sprott bought in. That's where you should have been buying. And I say to you, well, congratulations. You should start, a YouTube channel and start telling people that's where they should buy, and because you know a lot more than me. But no, I can't see the future, unfortunately. All I know is at that point where I've drawn that red arrow, it was a wall of supply and demand was getting the hell out of the way. And that's all we know. That's what we trade on here. DYL, very similar here. No reason to buy it for me. No reason to sell it either. So just for new people, I know we've always got new people. I would prefer when you ask about the setups, we've got 3 types of setups. You'll learn as you go. You won't know them now. You probably got an idea that one's a continuation. It's bottom left, top right. One's a bit more of a turnaround. It's got above the moving averages. It's pulled back and it's starting to go again. And the aggressive I've just explained to you. So when you're asking me about, hey, Carl, I'm interested in this, say, look, tell me what you want to do, plus 1/3, minus 1/3. I'll know if you're going long or short. Tell me what sort of setup it is. Carl, I'm interested in this plus 1/3 continuation setup. Carl, plus 1/3 aggressive setup. Carl, minus 1/3 continuation setup. And I think that'll put you in a better position to understand what I'll say. I don't want to waste a lot of time with these sorts of charts. I know that seems harsh, saying Paladin's a waste of time, Dick Yellow's a waste of time. For other people in this presentation, in this group tonight, it is a waste of time. It might not be a waste of time to you, but it is a waste of time to them because they have fully converted their thinking over to my way of doing things. So they don't really want to talk about these just yet because they know that when Deep Yellow eventually does this sort of stuff, it's going to come up for discussion here, very serious discussion. We'll consider it then. But whilst it's down here, we don't really care about it, okay? So it's not as simple as come in and just ask about your stocks. It's, hey, look, we're all here to learn a particular model, and we're going to ask about our stocks with that model in mind. Hayden's got, hi, Carl, I'm keen to hear your thoughts on holding SHV. Which is, look, unfortunately, again, we had a news item here. So this was one of the best trends on the ASX. This thing withstood the trade wars. It withstood Powell getting fired. It withstood absolutely everything. It was invincible, okay, until it announced its trading update, where it said, actually, we're not going as well as many of you have thought. And that was that day there. And that is going to happen much like Paladin. You know, we're going to be short Paladin because look at the chart, we're going to be long this thing. It's inevitable. And what do? Is this a species-ending event? So I really do want to talk about this, or I think we could learn a lot from this. Is this a species-ending event candle? It is very, very close to it, because don't forget, it starts up here. It starts in the gap. So it's a really big black candle, but that shadow into that long-term uptrend trend ribbon, we know, I think collectively we'll all go, look, it deserves another candle. Like, let's just see how the next candle falls, and then we'll make our decision. What would you have said about this candle here? Give it another candle, isn't it? We're like literally going candle by candle here. We know something's wrong, but we want to see, look, is this salvageable, or could we at least get a better exit price? I think we're probably more leaning to the second scenario. That's still a good candle. That's still a good candle. That's not as good, but it's not terrible. And that's actually a decent candle today as well. So we're still a little bit in limbo. We can start to ratchet up. Okay, ratchet up what we constitute as a point of no return. So we start out as this is a point of no return. And then I feel given circumstances, we should say, look, that's my new point of return. That's my new point of return. That's my new point of return. That's my new point of return, okay? And don't forget, if you were here, your FRP on this day, right? So we're still FRP, okay? And we've now got a path. Sorry, I'm stuttering here. We've now got a path out of this where we can literally go minus 1/3, minus 1/3. Depending on how bad the candle is, you might go more, okay? But we don't want to be getting stuck in this one. Whilst it's going up, we're happy with it. We'll let it go, but we're using credible points. I know they're only intraday points of demand, but we have to go. We have to think like that because of this event here, okay? And you are going to be in this situation often in your trading career, okay? So I think it's good to have a sensible method of saying, because we're only doing a third, right? We're not jumping out all. If it tips that one and then goes back up the next day, we're still okay. But we probably don't mind just being a little bit more risk off on this one. So to put Ben's questions in perspective again, if we spend too much time on the ones that really have no meaning to us, then we're going to miss potentially some of these opportunities as well to pick up practical tools on how to execute trades when a trend goes wrong. Let's go to, okay, I hadn't saying the rest of it. I've held after the large black candle. Okay, good. This is why I'm here. Because of the long tail, even better. The next candle also helped. Wow. Now I can see the small tails, but not yet moving higher. Okay, well, I've answered your question, but your question is brilliant, Hayden. That's exactly the question I want to get, because it shows me you understand what the hell is going on. Brilliant. Keen to hear your thoughts on Bitcoin now. Okay, let's do Bitcoin. I was hoping I could avoid it. Look, my Bitcoin calls aren't that bad, but they could be better, isn't it? Oh, Bitcoin. Let's go to Bitcoin. Look, credible. Absolutely credible. That's a very, very decent rally there, and a very shallow pullback. And I honestly, I can't fault this for a turnaround setup. It's more of a continuation turnaround setup, because obviously we're still in a long-term uptrend here, and it's a continuation. It's a turnaround, so it's continuation. We get that part, but it's a turnaround because we've interacted with the long-term trend ribbon. So it's a bit of a hybrid setup, if you like. But I like this candle, and I like the very, very shallow nature of these pullbacks. And look, so it's a yes from me. This is a plus 1/3. I think adding some risk. I know Fateful last time I said this. If you've never had any and you're looking to add some, adding some risk here is valid. Next high close. Well, that's still a live candle. So let me just write next high close, because the last closed candle wasn't that great. But today's candle, which is live, it'll be live probably until about 8 o'clock tomorrow morning, so it'll go on like a 4 p.m. US closed or so. Then that candle there, high close, then plus 1/3, okay? And I think the last time I said that was, might have been, no, I think it was here during that live candle, or maybe here. No, maybe here. It's coming out of here. I can't remember. Or maybe it was here. I think maybe it was here. I think it was maybe here. It was coming out of long-term trend ribbon, wasn't it? And that huge white candle. Yes. And then the next candle was equally black. Some of you probably remember. You would have gone flat after that, and then you'd be getting back in now. So, you would have gone flat after the next candle, to be fair. All right, let's go to the next one here, which is, I think we fixed that problem there. Lendlease for a short, I think, is where we're going next. So let's go here, LLC, and let's go zoom normal so we can compare and contrast in a consistent way. And, if we took all these candles, turn the black ones white, the white ones black, flip the chart upside down, change the colour of those red ribbons to green, this would be the perfect long setup, which means it's the perfect short setup. I can't fault it. It did make the feature list of shorts today, as you can see in that list there. CRN, it gets in pretty much every day, just on pedigree. CTT, same sort of thing. EBR is a new entrant to that list. Not that long ago, we were plus 1/3 through here, and you can see right there is the day you can no longer have any risk on this one. I shouldn't have to explain why. Everybody who's witnessed more than, say, 4 of my sessions should know that is a zero risk day. And then we tried to rally off the long-term trend ribbon. Huge species ending event here, confirmation here. Probably could have shorted on that day, but I wanted to see it initially go beneath the long-term trend ribbon, that long-term trend ribbon turn amber, and then I'm just looking for any next low close. So that for me is a short. If you can short it, I don't know, I haven't checked if you can short it with your various providers. Probably this one can, similar, rallying back up, failing in that rally to the short-term trend ribbon now. HCW, it's just every day. So is LIC, so is Lendlease, so is that one. SRV, I think, is a very early one, and I put this in the interest of mixing up the types of setups, but I think this is a very early one. So with that comes a little bit more risk, and I think this one's also a nice turnaround setup, confirmed. But to answer your question here, Hayden, about Lendlease, and I'm stalling because I'm trying to get back to your question. Thoughts on entering short today's close for Lendlease, or do you wait for the pullback and reversal? No, I'm happy with a minus 1/3 on that one. Minus 1/3 FRP, if you've got it. Let's go to... I think we sorted out all those technical issues you seem to have sorted out amongst yourselves. Nicola, hi Carl, I've been watching SVR for a while, and that one, yes, that was in yesterday. I didn't see what it did today. Not that one, SVR, don't panic. Yes, it still looks pretty good. I know today's candle wasn't ideal, but not a deal breaker at all. Weak candle today, correct. At the supply zone, yes, it was. Yes, continue to watch for an entry, I agree. Would you watch a bit longer? Yes, next high close. Yeah, I'm pretty sure I ran this. I reckon I ran it on this day here, and I reckon it featured on that day. I reckon that was a feature. I'm pretty sure I ran it here as a plus 1/3. So definitely entry signals in the mix. And yes, I agree with you. I know today's candle wasn't ideal, but it was at a point of supply. So let's go next high close, plus 1/3 on that one. What's the time? Getting a little bit on. Please don't type any more in because there's a long list still to get to. So I'm going to stop at Robert with your Trigg Minerals. Okay, getting back up to... I'm just trying to get through all of your technical support there. Few of those. Okay, Robert has got RNU, which is Renascor Resources. Hey, I think there's something here. I know it's one of those, it was a graphite, but there's a bit of a rally in the critical minerals and some battery metals, critical minerals and rare earths is what I was going for. Sectors. I'm always concerned about getting into the last one that moves. There's a reason why it's the last one. Is Renascor the last one to finally go? We looked at ASM today, didn't we? We looked at ARU. We looked at ASM. CHN hasn't gone yet, so maybe that'll be the last one, which gives us the green light to go Renascor. It's a yes for me. This is kind of a turnaround, but it's kind of aggressive as well. It's kind of a turnaround because ideally we want to be back above the long-term trend ribbon, but sometimes you don't always get that. Sometimes you get the dink in the trend ribbon, which is the dink. So we've had the dink. That's the important thing. I wouldn't do it without the dink, Robert. I wouldn't touch it without the dink. So we've had the dink. Ideally, that dink would have been a little bit higher, showing us that the long-term trend ribbon is acting as dynamic demand, okay? But we have this. We have that short-term uptrend. We have the rising peaks and rising troughs. We have a wall of white candles, which is what we need to see, and some decent volume. I know the volume doesn't appear that spectacular, but it is skewed by that day there, okay? So take that out. We have quite a few days around the low and just after of substantially above average volume. So it's a yes for me. It is borderline aggressive, okay, because we haven't had the dink above the long-term trend ribbon, but you go into these things eyes wide open. I never told you that this is a black box system. I've told you this is a common sense system, okay? It's about saying, it's not about blindly following rules. It's about saying what is the demand supply environment telling us, what is the price action telling us. And to say, well, I can't trade it because the dink wasn't 0.5% higher is just silly, okay? We've had a push into the long-term trend ribbon. We've seen how the latent supply in that long-term trend ribbon, historically, the most incredible dynamic zone of supply you could possibly get. My long-term trend ribbon, ladies and gentlemen, is the best long-term trend ribbon in the universe, maybe further and beyond. And therefore, you know, for the first time in a very long time, we've got a very credible signal here, and this is why it's aggressive right here. I mean, what a great example! Like there, it did a very similar thing. There, it did a very similar thing, and look what happened afterwards. So you can see why this is very much on the aggressive side of a turnaround setup. But you go into that eyes wide open. You might do a sixth instead. You might just dip a toe in on this candle. The next white candle, add another six. The next white candle, add another six, until you're clear of that long-term trend ribbon, and then you're in a whole different world altogether. I'll put plus 1/3. It is a turnaround. I believe it's a turnaround setup. And FRP, there you go. Thank you for bringing that to my attention. I think it's a really interesting case study, Robert. He's also mentioned ARU, which we have discussed already, and NWC, which is not as good as any of those. I'm not going to spend any more time on it, Robert, because I think you can do the analysis there and figure out why this one doesn't deserve to be spoken about in the same context as ARU and RNU. Let's go to Rishi. Rishi's got, hi Carl, I thought you'll send an email every Monday for the meeting. No, Rishi, I won't send you an email every Monday for the meeting. There's a reason for that. I'm not a business, I'm not an enterprise, and you're not my customers, okay? You're just a bunch of people that happen to tune in every Monday while I'm talking. So for that reason, you'll have to take some responsibility and remember on Monday to tune in. There you go. Would you mind explaining the future of gold and silver? Which one will be better at this stage to invest in? Well, I've talked a lot about gold at the start. I said I think the run might be over for at least a while, and silver didn't look anywhere near as gold. So hopefully that puts it into perspective. I'm not into big picture, big themes. I'm not into narratives. Rishi, I couldn't care less about the story behind something. All I care about is the price action, the candles, the trends, and some of the trends on gold. If you've forgotten what it looks like, I'll just remind you. Some of those candles on gold are giving me cause to pause at this point in time. And that could change very quickly. One nice big white candle pushing back up into 3,400, nice high close. Hey, I'm converted. I'm back on board the gold train. Because you have to admit, I've been on board the gold train, since about there, okay? So I've seen something, particularly on ASX stocks, and hey, we are at the forefront of this wave. Global investors look to the ASX to buy gold stocks. Make no mistake, they look to the TSX as well. There's some big ones in the US. But if something like that happens on the ASX in the ASX gold sector, it's because some funds have started to move money in a different direction. So once again, I must reiterate: is gold going to 5,000? I don't know. Who cares? All I care about is the trend that it takes and the price action that it'll exhibit to get there. Okay, let's go back to, I'll see if there's a stock in here regarding ASX stocks SGQ. St. George Mining. Okay, well, it's still in a long-term downtrend, but it is testing that long-term downtrend. So that's a big tick. We've had some huge volume, a big white candle. That's a big tick. It's not far away, potentially, from a turnaround setup, but it would at least need to sort of move above this long-term trend. I'd like to see a few candles with shadows. That's the lines pointing back into that long-term trend ribbon, downwards into that ribbon. Just a couple of candles just sort of pushing, and then maybe one nice big one here. And then I could have a look at it. Even then, though, it's still got a few issues. Like there's probably going to be a bunch of latent supply in the system here. Latent just means it's there when we get there. That's probably the best way to describe latent. It's there, but it's only there when we get there. And the reason why that is, the person who got in on this move up here, because it actually looked very good there, at 4.4 cents, they don't want to supply here, right? They don't want to supply at 3. They're never going to take a loss on this thing. Warren Buffett said, rule number 1, don't lose money. Rule number 2, see rule number 1. So they're not going to get out of this stuff. This thing could stay at 2.5 cents or go to 0. It could be there for the next 10 years and they'd never sell a share. But I tell you what, if this got back to 4.5 cents, they'd be out of there like that. So that's the definition of latent supply, and there's a lot of latent supply, I think, in the system up there. So not the worst one I've seen, but there's not enough in it yet for me to want to get involved. But bring it up next time and the next time, and we'll have a look at it. Adonis saying, I think gold has more in it, but we'll see. Adonis, well put. I'm with you. Look, probably does, but let's see, because there's a reason to be cautious now. TMG from Hoozle, which is in my list today. It was very nearly made the feature list, but I just felt Hoozle, as probably you're also thinking, that this point of supply up here, and it could even extend into there, really, if we're honest, and drawing it at that peak as well. It just held me back. This isn't a fantastic move, don't get me wrong. And I certainly think it is in a basket of stocks that deserves to be considered as, you're not waiting for another candle. You're not waiting for the next high close. It's just F up plus 1/3, right? But go into these things eyes wide open. Don't be surprised if you get a bunch of black candles in there or it peaks out there and makes a lower peak. You know what to do with it. Again, you should also be comparing and contrasting this sort of setup to all the other ones we've seen tonight as well. But it got the 1/3 for me tonight, or based upon that candle. ASB certainly, don't need to say any more about that than the fact that, of course, it is the perfect chart. It is a picture of excess demand, and that's what we want to find. This is about market consensus. This is market consensus here. The market is certain. The demand side, that is people with cash, they are trying to buy. How do you know they're trying to buy? Look at the damn chart. They are throwing their money at this thing, and the people who have it don't want to sell it unless they are enticed out by higher and higher prices. They don't want to sell. And they don't want to sell it because they know it's a good stock. So the cash knows it's a good stock. The sellers, the stock knows, people who have the stock know it's a good stock, and that's consensus. That's what we want. SGQ, that's not consensus yet, okay? That is a lack of consensus. That is equilibrium. That is just as many people think it's good as just as many people think it's terrible. And that's why it's not going anywhere. So, we want to find, if this is the template for consensus, that's what we want to be looking for. Let's go to the next one. So yes, on both of those, Hoozle. Michael, ASM, very clever. I thought this might be a bit controversial, and I think this is really speculative. Actually, I wouldn't think it is as speculative as many of others we've seen. What was that? RNU. But these two black candles do concern me, okay? And I am upgrading it. So normally those two black candles would put me off. But I like this candle today. I like the volume push today, okay? I like the fact that it's holding that long-term downtrend ribbon, okay? Zoom out, and like clockwork, I can't make this shit up, ladies and gentlemen. I can't make it up, right? So, and it's pure coincidence. It is pure coincidence that this thing works so well. But I like the fact it's doing it where it's doing it. And I can make 1-to-1. So that's why I thought that's worth a punt. I know it's the kiss of death, famous last words. But that's all it is, a punt, eyes wide open. We're not putting the house on that one. This one is much like many of the other ones we've seen, not ready yet. Let's see it cook a little bit more, turn its price action around. Nice uptrend, short-term uptrend at least, price action, and we'll look at it in a little while. Not a turnaround play yet on SMN, Michael, but yes, a turnaround play on ASM. In fact, ASM, apart from those two black candles, is the textbook turnaround play. TNE also came up on my list today, Hoozle. It is, we did talk about it next high close, didn't we? And I wonder which candle it was. I feel maybe It might have been, well, we would have been here, we would have had the 14th candle. So it's weird. Next high close. Maybe I said I wanted a little bit more. Probably a little bit more. I know that's not a bad candle. It's a reasonably high close, but I probably said maybe just that little upper shadow is keeping me out. Plus, we're not far away from this point of supply. So give me one more good candle. One more close close to this level, and I'll happily go. I'm pretty sure that's what I said. Does it make sense to me now? So why wouldn't I have said it? I looked at this today, and this is, again, one of our continuations, our hybrid setup, continuation and turnaround, isn't it? Because it's turning around at the long-term uptrend, and we're still in a long-term uptrend. I nearly put this in today. It would have made the regular list. It would have been a feature, okay? But this is all I'm waiting for here and nothing else. Next high close, plus 1/3. It's very close. And I think when it does, it deserves a very, very good look at this one because of the pedigree that we could see before it. So yes from me on that condition. Let's go to Bank of Queensland, which I think all we're waiting for here, Peter, is a dink. And I'm sure you know what I mean. Any dink here. Any dink here, happy to go. The shallower, obviously, the better, but this one's in play now. We're just looking for an entry point. This is a yes. We just need to find the right entry point now. Okay. Let's go to we'll do your US one in a second. On the LSE, I think that one is, I think it's an III or is it an LLL? There's no way I can tell, Peter. Don't make me type in 100 things to try and find it. IPX. Spell it out phonetically for me. Iprionics. Is that how you say it? I don't know. I've always called it IPX. An interesting one. Went from being long to, from this candle here, short, and really probably on this candle, and certainly on this candle, back to neutral. Probably flattened out on that short trade. Probably broke even on it. No need to be short and no need to be long. Probably closer to being a long than a short next time around. But we want to see something like that. And when we see it, ask me about it again next week, and that's when we'll take it a little bit more seriously. But I still think it's got a little bit of work to do. In the meantime, if I don't see a nice white candle that closes above that high there, that high there is 368. Certainly would take it very seriously as a turnaround setup, but needs just a little bit more cooking, Mark. Sue, hi Carl, what are your thoughts on BVS? BVS. I think what you can see here, we had a zero risk position prior to this on closing beneath, I don't know, around there for whatever reason. Certainly did it. I think we had minus a third, 2/3. So history of it, you wouldn't be in it necessarily. Was there reason to get in it before this? I think this is your closest thing to getting back in. I'm not sure if I put it in on that day. I don't recall. I wonder if I did. It looks, look, that's the candle. Obviously not the current candle, but that's what we need to see. So we don't see that, and therefore, no. I wouldn't be in it unless you bought it on that day. And if you bought it on that day, I say, okay, well that makes a lot of sense. And then I think we're probably going flat again. Today's lower shadow gives you. We have talked about this concept. So that's your new point of no return, close beneath there, and very close, I think, to being flat again on that one. Let's go to, I lost my spot. Let's go to MVF, which we could only be looking at for a short. It has rallied. I think with this close here, you probably, if you did it on today's candle, took a third off. If you didn't, then I think we're still FRP here on the short trade. FRP. And I'm going to go next low close. So nice black candle here. I think you can add some risk to the short side on this one. So let me change the colour of that. Not sure how we ended up there, but it's going to look something like this. So let's go here. So something like that is what I'm looking for here. And I think you can short it again. So something like that, I think, would give you cause to go another minus third. Okay, SX2. Should we exit that based upon the gold chart? I can't see any reason to get out of that just yet. The candles are still very strong there, and there are still plenty of gold stocks out there that still have strong setups. The odd thing is there's actually Oh, there's a trough there. There's a trough. That's a trough. I'm trying to find a trough. There we go. Okay. So that's the trough. I think close beneath there. Obviously minus a third, depending on the candles, severity of the candle, you might go 2/3. But I can't see any reason to do it now. It still looks very strong. I know there's a bit of supply up here. I can see the supply that you're seeing. It's a bit close. It's a little bit close to $6, but $6 isn't really one of those big major round numbers. So no, I think I'm a happy holder right now. But as always, attentive for any signs that we need to change that. Don't get too jittery just because the gold chart isn't good. You still have to go understand the attributes of your individual holdings. Francine saying yes, I'm not sure why. Perry, US stocks would do those in a fraction of a second. LYC I still think is okay. We talked about latent supply clearly. Were there a bunch of suckers caught in there? There probably were. That's why it took 2 decent sell candles and quite a lot of trading to get rid of those suckers. Now, here's the other thing. This is the next chapter, isn't it, of latent supply. Once you get rid of all of those suckers, right? Because don't forget, all those suckers wanted to do is like, please, God, just let me break even. And in brackets, and I promise to never buy LYC or rare earths stocks again. Okay, and their wish was answered, right? But you've got to think about how they feel now, and now they're thinking, why are you so nasty to me, God? I knew LYC and rare earths was / is a massive buy. All right. They're because they were part of supply, they got out. Oh, thank goodness I broke even. They got their money back. Now they're part of demand again, aren't they? Okay. And this is why historical points of supply will tend to, not always, but will tend to act as points of demand going forward. From all those people who realise, because they won't buy at $9, will they? They got out at $8. So they're just hoping, please God, let it come back to $8 so I can get back in at the place I got out again. And then you get that latent demand in the system. I still think this one's okay. This is not a great candle, but this is going to be a really dynamic trade. There's lots of scared money, I think, there's lots of narratives about, well, yes, it's got rare earths, but it's ridiculously expensive. So it'll move around. I think if you've got it, definitely hang into it because the price action is good. This old point of supply is acting as a point of demand. This is not the most impressive candle, but today's candle's half decent. And that's where you can get on this. It's worth giving it a go. You've got your points of demand under which you're going to take some action, like there, for example, like there, short-term uptrend ribbon. It might throw in a really credible point of supply, supply side candle up here, okay, that you might need to act upon. But if you've got it, I think you can have it, you can hold it. If you don't have it, today's candle is not strong enough for me to want to add risk at this point in time. This candle gives me some cause for concern. If we were to get a really nice white candle, high close, closing back above that supply point, I would consider it again, but also maybe at a reduced risk, just knowing that it's that type of trade right now. But yes, I think it's definitely warranted FRP if you've got it, and keeping an eye on it if you don't. It's just not quite there yet. Just FRP, isn't it? Look, next high close, plus 1/3, but I want to see it close above the big black candle. Okay, let's go to, and if you're wondering, Carl just described me. Carl just literally said what I used to do. How does he know what I used to do? Because I was you, and I was you for many, 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 many years, doing the wrong thing over and over again.
And then I saw this episode of Seinfeld where George Costanza comes to this realization that after years and decades of doing things the wrong way and getting shitty results, he realized that he had to do the exact opposite. Okay. And then his life turned around. I don't know if you remember the episode, but it had a profound effect on me. I kind of realized that, you know what? I keep doing stupid things and I keep getting bad. You know, I need to do the exact opposite. I have to do the opposite of selling at that point. No, I need to buy at that point. Or where I would have bought, I would sell. I would just do the opposite. It's such a simple system and it works in the markets. What are we doing here? We've got a bit of a long night tonight, don't we? SRL. Oh, okay. Hey, I haven't seen this one, but this is probably the best thing I've seen tonight. Now, I reckon it doesn't have, you guys see that minimum X dash over filter. So it hasn't got my turnover filter yet. I'm not sure. It must be really close to it. I did have, I thought I added an extra, or maybe I put it on in my diagnostics, what the actual average turnover was. I wonder if it's here. Let's go SRL. I'm sure I added this diagnostic in where I could see what the thing was and how close it was. I won't do it now. I'll put it in next time so I can see how close it is to hitting my turnover filter. It can't be that far away. This is the textbook turnaround setup, like straight back to there, boom. I like that candle. That would be plus 1/3. This is just adding another third. So yeah, yes, I like this one. Plus 1/3 turnaround setup, FRP if you've got it. Well spotted. Who was that? Haraju, well spotted. A WA8 is in the list. That one's FRP plus 1/3 also. Was in the feature. Well done. Good eye. We'll do Brett's. ILT is the bond one. Which look, I think. Oh, okay. I thought it was ILT was a bond ETF. I'm mistaken. ILT is not a bond ETF. very, very different. Iltani Resources. Small, illiquid, clearly. It hasn't met my turnover filter, but doesn't mean it's bad at all. It just means it hasn't met my turnover filter. I can't fault this one. I think it's very good. I think there's a bit of a point of supply in here, but I'm not too fussed about it. If you're not too fussed about it, let's extend that across, see exactly where it is. Looks a little bit close to that, but this is a very strong candle and a decent volume showing today. I mean, when I say decent, it's all of 500,000 shares on a 20-cent stock. So, it is grossly illiquid. But I don't mind it. It's if you're interested in it, the story, whatever, plus 1/3 for me. I can't fault it. I think it's, well, apart from that, I can't fault it. I think it's very good. Is the gist of it. Let's go to Matthew. Good evening, Cole. I hope you're well. I am well. Thanks for tonight's insights. Pleasure. US, we'll do that in a second. Let's go to TMG, which I think we have done before. Yes, we have. I did it for Hoozle. We'll do Matthew's PLTR in a second. Rishi saying, thank you very much for answering my questions, Carl. I'm loving your hard work. All the best, not a problem. Peter's got LSE, and I think a few people put some stuff in after they were supposed to. But we are heading now over to the Trading View screen, which is here. And let me find it. There it is. Okay. Let's do LSE III. Stocks, LSE, there we go, 3I Group. Yes, I like it. I can't fault it. I'm just waiting for a signal. Let me go to the weekly chart to see if there's anything sinister out there. There isn't. So, very strong setup. I'm very curious as to what they do. That's one hell of a comeback, isn't it? Taken out, it's trading at a record high. What does that tell you? All I need is another high close. There's no signal there on that last candle, which may actually be live now by the time we're talking. But just give me a high close. X high close, plus 1/3. Apart from that, I can't fault it at all. Let's click save on that one. Let's go to the next one, which is PLTR, the artificial intelligence stock. This looks very good. Very happy with this one. The only complaint I have is that big point of supply up there, but I think everything good that's happening here outweighs the risk from that. But it is a risk. But you're going into it eyes wide open. You know that you're going to get in here and you might have to get out pretty quickly if there's some almighty supply side signal coming in there. I don't think it's going to be the case, but you understand that it could be the case. That's all. So let me go. Let me just zoom out here. I just want to see if that was a first test of anything. It's not, so that's okay. And I don't have to wait for our next high close here. It's FRP if you've got it, and plus 1/3 if you don't, because that last candle is perfect. Thank you for that one, Matthew. Blue Sky will sell the. Oh, see, I didn't know there was an earnings call coming up, and that does create a big question. I was seeing huge moves on US stocks before earnings call. Look, I think you want to have some risk in the system. Look, I think 1/3 is a sensible place to be of what you intend to trade on this one. But having some risk in the system ahead of the earnings report, but also understanding what could happen if it doesn't. So you go into eyes wide open. Let's go to NXT, which is Next Tracker, I'm guessing. This one also for you, Matthew, a bit more of a turnaround play. It is a bit more of a turnaround play. I don't think it's ready just yet. I still want to see a little bit of a dink there. I'm just worried about this sort of sliding peaks here, sliding peaks, sliding troughs. I think it's more in that sort of channel than anything else. To be sure it's sort of out of that channel, you might want to see a test of this level. So about 46.50, some candles into there, a little bit of a dink, and then on that next dink you could go. But even if you got rid of that point of supply, there's that point of supply and that point of supply as well. I think this is a little bit hard work for me. So I'm not going to write anything on screen, because personally with my money, and I think that's what you're here to listen to, I wouldn't put my money on it. That doesn't mean it's not going to go up tenfold tomorrow. I don't know. But I think we can find a stronger setup than that. That's all. Let's keep moving. Don is saying IG. I'm not sure if he wants a US stock or he might be talking about the broking platforms when we talked about broking platforms from before. I suspect that's what it is. Let's go to Perry TTWO, which is one we've looked at before, maybe not recently. Looks very good. This is just a great demand side showing. Following through there on Friday, just checking out here, and even better. I like it even better now, because we can see how well this concept works of testing, probing points of supply. We can see that latent supply does exist in the market, okay? But at the same time, that latent supply now, they got it there, they're in cash now, and they're watching this stock that they're so familiar with. We know they're familiar with the stock. We know they know the stock's best attributes. Right, so they're the most qualified people to buy this now. They're in cash, and we're through that level. So I'm very happy with this chart. Plus 1/3, cannot fault it at all. FRP, don't have to wait for anything on that one. Perry, let's go to your next one, which is DB, simply DB. Deutsche Bank, of course, yeah. Okay, well, there we go. So this is great. Francine, you asked earlier on about the global banking sector ETF. And hooray, that's what's driving it. That's what you're really buying. So this is so instructive, I think, for us to see this chart right now. And I think it looks brilliant. Why are they flooding into global banks? We saw Commonwealth Bank pop 4% the other day, and some people think that's a big coincidence. It happens in isolation. It is not happening in isolation. It is in a basket of big global banks that are being sought after by hedge funds, fund managers, because they see them as being a place to hide. They're nice, they're liquid, they've got dividend yields. They're protected by governments as well. They're too big to fail. Systemically, they've got some insulation from potential systemic risks. But they're all narratives, aren't they? They're all plausible theories backing up what the chart's doing, and that's all a bloody narrative is. They're completely useless. All that matters is the price action and what we can say for certain. I can't say if those things I said before are certain, but you all believe them for a second. You're all bloody well nodding. You go, oh yeah, Carl's making a lot of sense there. Off he goes. Oh, that sounds really good to me. Music to my ears. But all that matters is that there's a bunch of people out there. They're not talking. They're buying, and the people who own the stock, they don't want to sell it either. So FRP plus 1/3 for me. Beware of narratives, everybody. Mannequin piss. That's what they are. Let's go to, if you're Dutch, you'll know what that means. Or Belgian, you'll know what that means. NWG. NatWest Group. Matthews must be Dutch because he's laughing.
Let's go to... this looks amazing. There you go, NatWest Group, same basket. So just for Perry, Perry's obviously hitting a sweet spot here in these setups. Just be aware that they're a similar theme, right? So they're going to be fairly highly correlated risk within your portfolio, but doesn't bother me right here. FRP plus 1/3. There you go, and enlightening me because I actually didn't know that was the situation there. Let's keep going. I think I've got all yours done there. They are blue sky territory, Perry. They look fantastic. Thank you for sharing those with us. Netflix for Peter, NFLX. I was watching it just before I started the show there. I was watching my Star Trek Next Generation for the 5th time on rotation. A bit of a trekkie. Probably got a few in the audience and probably a few others that are going, why would you waste your time? Let's talk about this one though. Let's go back to perfect. But bloody hell, there you go. It's all of us Trekkies watching reruns of Star Trek. It looks great. What's the narrative here about? I don't know. People are about to be unemployed in the US, so they're going to be at home watching Netflix. You're not going to get rid of your Netflix subscription, are you? It's the last thing to go, I guess. I don't get the narrative, but I certainly get the demand and supply. FRP. Yeah, there you go. Interesting. Let's go up the list. We're getting close, everybody, and thanks for hanging on. At least it's not crazy times over there. Daylight savings has gone back the other way. And I'm just going back up the list, obviously, trying to find just the US ones now. And they're buried within all the others, as you might expect, and all the technical help that you were giving each other, which is fantastic. Getting close to the top, and I'm pretty sure I've got them all. No, Adonis, you've been very patient. Adonis, fortunately, you had Netflix as well, actually, and that's it. So I am done. Well, what a marathon this evening. I know we had 2 weeks to catch up, so probably not all that surprising. But I think we did some good work tonight, actually. I think we covered some really good grounds. I know I spoke probably a bit too long about the macro stuff at the start, especially considering I've got no idea where it's going next. But hopefully there was some value in all of it for you. The content of this presentation, as good as I hope it was, is general in nature. You shouldn't act upon it unless you consider it carefully or seek the help of a financial professional like they know what they're doing. Always remember that you could lose money. You're probably going to lose money at some stage. That is part and parcel of what you're doing here. You are managing risk, but you cannot avoid risk, ladies and gentlemen. And you need to embrace that. You need to embrace that thought. You are going to lose. Your job is to ensure that you lose as little as possible. Ultimately, it's you and not I who's responsible for the stuff that you do. And that brings us to the end. Pleasure. I thought I'd go with the flowery picture today, a little bit upbeat, because I think that's where we want to be right now. All the best, everybody, for your trading until we catch up again. Bye-bye for now.